Let's go back to the start of the dot-com bubble, the the beginning of the end for tech stocks back in the dot-com era. So what was the trigger for the collapse? And then, of course, as you know, the house of cards fell, seemingly overnight.
And so what happened was there were companies that not only had no sales, but people were basing their whole valuation on how many times somebody hit their website, when we all knew that fundamentally, longer term, you're going to need a lot more than that. And that's what turned in myself back then to be bearish. The problem now is this, David, and this is probably the most urgent point I can say is the United States, economically, socially, and politically, is in far worse shape than any time other than the major declines. 2000, 2008, 2000, 1987, and even 1929. And one of the biggest reasons is we can no longer be self-sufficient. We went from the world's largest creditor nation when I entered the business in the early 80s to an extremely indebted country that now depends on printing money and outside people for us to keep living the lifestyle we've grown accustomed to. And that's the biggest difference of the other previous crashes, including 2000.